Good afternoon and welcome to the market wrap for Tuesday, the 3rd of February. And look, we did start off the day on a very buoyant note. We're up by 1.3% at our best levels, but we did take a bit of a dive at around 2:30 p.m. when the RBA handed down its first interest rate hike in over 2 years, lifting rates from 3.6% to 3.85%. So we certainly did pare back some of those earlier gains as the session went on, but we did still end the session in positive territory, lifting by 0.9% at 8,857 points. So that did snap a 4-day losing streak, and coincidentally we did actually end the day higher despite that decision. So let's talk about the RBA's decision. Of course, they did raise rates in what was a unanimous decision by the board members, and this is after inflation picked up materially in the second half of 2025, which is what the RBA statement said today. As a result, the RBA thinks inflation is likely to remain above target for some time. They also pointed out that the labour market conditions remain a little tight. So look, this decision was widely expected. It should be mentioned. So it's not really a surprise to many, but definitely still not a great outcome for mortgage holders. In terms of what's ahead for interest rates, now going off the statement today, we are hearing that same rhetoric that the RBA will be watching upcoming data to guide its decisions. The fact that it was a unanimous decision can be viewed as a little hawkish perhaps, and the fact the RBA thinks inflation will remain above their 2.5% target for some time also raises some eyebrows as to whether this is a one and done scenario or if it could be potentially the start of a series of hikes. But look, some of those fears were eased when we heard from Michelle Bullock about an hour after that decision was handed down. So what we learnt from her speech, she said there won't be any forward guidance. The board will remain focused on data. She said the board don't have a particular path in mind for interest rates. They're going to wait, monitor and adjust as necessary, as they have done in the past, and they're going to be cautious, that key word that she used. So essentially the RBA's stance is that they're not ruling anything in or out, and I think that sort of calmed a bit of nerves that potentially rates could keep going higher from here. So it's really going to come down to the upcoming data over the next few weeks and months to see what happens going forward with interest rates. Now, looking across the different sectors today, we did see broad-based improvements. We saw 10 of 11 sectors actually lifting by the end of the session, which was pretty much the case for the whole session today. The materials sector did a lot of the heavy lifting as it bounced back from a couple of hefty sessions of falls. It was down 6.5% over the past 2 days before today. And of course, today it did lift back up by around 1.5%, rebounding from that as we did see precious metals start to come back from the steep falls over the past couple of days, those historic falls that we have been talking about, and that certainly did play a part in keeping our market afloat today. But we did see gains, right, as I said, almost right across the board, with the exception of utilities, which fell by a little over 1%, but quite a strong performance from some of our rate sensitive sectors like consumer discretionary, tech and financials. I guess context is important here because we did have our worst day in 10 weeks just yesterday and 4 straight days of declines as well. So if it wasn't for that, perhaps in today's session it could have potentially been a different story overall. Now, looking at some of today's winners, DroneShield is still seeing big share price swings from one day to the next. Today it actually topped the winners list. Now remember, last year it was up around 800% at one point before ending the year as the top performer. It lifted 300% last year, and it's up another 20% in the early stages of this year. Elsewhere, CBA flagged a $68 million provision that will impact its first half results ahead of its results, which will be out next Wednesday, the 11th of February, saying the provision relates to a goodwill payment made to customers as a result of its ASIC's better banking review. So today we did see CBA shares up around 1%, but they did fall back by around 7% in January. Newmont bounced back from its 10% drop yesterday as gold prices picked up from that sharp sell-off. We're seeing gold up around 3.5% in today's session and silver up even more, up around 5.5%. And NRW Holdings popped 5% after winning a contract with Rio Tinto worth $175 million. On the losers list, Neuren Pharmaceuticals fell to a 6-month low. It was today's worst performer after the European regulators signalled they may reject its partner Acadia's Rett syndrome drug, so its shares down around 10%. Debt collector Credit Corp was out with half-year results. It reaffirmed its full-year guidance, but its overall results were dragged down by a weaker performance in its Australian and New Zealand segment. It did, however, say that the soft first-half earnings are expected to be reversed in the second half. It also declared an interim dividend of 32 cents per share, in line with the same time last year, but clearly investors not favouring those results. Elsewhere, Telix Pharmaceuticals announced the resignation of its non-executive director and board chair, which are both effective today. And Credit Corp continued to slide after downgrading its FY26 guidance in yesterday's session. Now, the Aussie dollar has picked up ground, particularly after we did see that rate hike. So it started the day at 69.6 and it got up to 70.1 at its best level of today, currently trading around 70 US cents. And that means the Aussie has recommenced its advance and is now up around 5% so far this year. Now, looking ahead from here, reporting season really takes all of the attention. So tonight we have a number of companies reporting out of the US, the likes of Pepsi, PayPal, Pfizer, Advanced Micro Devices, and Super Micro Computer. We'll have to wait a couple more days for Amazon and Alphabet to release their results. And then on the local front tomorrow, we have Charter Hall, we have Amcor and Pinnacle Investment Management releasing their results. As usual, reporting season is quite soft in the early part of the month, but it does heat up in the coming weeks, and especially towards the back end of the month. So we'll be waiting for it to ramp up here in Australia. Have a nice night.